It is looking like it's below expectations, Charles. 157,000 jobs created in the month of July versus an estimate of 190,000. Your reaction?
If it's Goldilocks with a small g, right? But the private sector, 170,000. That's near the overall estimate. I would like to get we got the participation rate. I'd like to know what the actual labor force, the amount of people who came in or out of the workforce was. I don't know if I missed that. But
markets traded down on this number, Charles.
It's drifting a little bit lower on this number. I thought it was going to be over 200,000 from everything else, from the PMI numbers to some of the other numbers that we've seen. So it's a slight disappointment. But 170,000 private sector, not too bad. Again, I'm always more interested in how many people are coming back into the labor force more than anything else.
Let's break it down. John Spallanzani, your thoughts on this number?
Yeah, I expected a muted response, so we're kind of like unchanged. I think that the hourly earnings were 0.1. It was revised a little bit lower last month. We got 0.3 this month. So all in all, I think it's in line. I think we're going to wait for 10 o'clock to see what the ISM non-manufacturing is going to be. Again, you know, the bulls are in charge. I think last night Japan overtook China as the biggest the second largest stock market in the world. That's pretty big news, right? So we have a communist country that's really hurting right now. Trump is hammering them on trade, but yet we have our best friend Japan really coming on strong. That's going to help the global economy.
Yeah, I mean, hiring definitely cooled in the month of July, but it looks like a solid number. Dagan, your thoughts?
So 2.7% is your growth in average hourly earnings. That's right in line with expectations going into this report, that we had a 96% chance probability being priced in for a rate hike at the September Federal Reserve meeting. So this keeps in expectations in check in terms of what the Fed does later this year. That is your good news. But with this 157,000 jobs created in the most recent month, that number is below the 3-month average. It's below the first half of the year average. It's also below the average of the last 12 months. That's why I would point to this 157,000 being a disappointment, because it's notably lower than the average that we've seen in the last year. And
Maria,
let me just finish. Earlier in the year, we saw this economy be able to pick up job growth and actually gain steam. That's why I would see this as a slight disappointment.
I agree with you. Who's jumping in there?
That was me, Maria. I think historically the month of obviously, July is normally a little bit lower for a couple of different reasons. So seasonally, it was expected to be a little bit lighter than the numbers, and that's why you see the market's not really reacting too much for the 157.
Look at the breakdown here. Yeah, go ahead, Lisa.
Jonathan, just very quickly, given the indications we've seen, Maria, of inflation, the PPI recently, I'm surprised to see that wage growth isn't greater than the 2.7% Dagan alluded to. This has been the one area for the average worker that they really haven't seen it come along with the stock market, with the economy. So I would have expected higher wages. We'll have to see, looking forward. That's the last shoe to drop, really, when it comes to the
you wonder if this is seasonal, like John just said. July, middle of the summer. We don't know. Markets have turned around here. We're looking at a negative performance, Lisa Erickson. But when you look at the services part of this economy, 118,000 jobs created in services, construction up 19,000, manufacturing, something that the president touted last night, up 37,000, and leisure hospitality up 40,000. So some very respectable numbers, but overall weaker than expected, Lisa.
Yeah, absolutely. And while the numbers are lower than consensus, I think to your point, Maria, we really want to look at the weight of the evidence here. And again, if you look at some of the underlying numbers, again, some solid results. And you've got really the nice fact that the inflation numbers are coming in moderately. So in terms of overall impact and implications for the economy and the markets, I think it's really overall positive, because what you're continuing to see is some nice gains overall on the payrolls. You're still seeing wage growth be moderate and yet higher than it was over the last year. And so really overall, again, a nice status quo report.
Well, if you think that the Federal Reserve is watching this closely, this is good news, right? Because you don't want the Federal Reserve to be raising interest rates all that much. Maybe it is more of a Goldilocks economy. Joni Courtney, how do you see it? What do you pull out of this?
I think overall, though the headline number is not good, and I do want to talk about why I think it's not good, there are some really great things in this report. To see 37,000 jobs in manufacturing is outstanding. I mean, for years we were losing jobs in in manufacturing and construction. So there are some really great segments here that are adding jobs. But I truly believe that part of the reason we're not seeing a stronger headline number is because we have 6.6 million job openings. We have 6.5 or 6.6 million unemployed people. We are still having a very difficult time. Employers are in such a tight market right now that the job openings are there, and they're not finding the talent to meet the demand there. And I think that is a big reason why we're not seeing a bigger number, because based on the demand, you would expect to see a number north of 200,000.
You're a small business owner, Jack Brewer.
Yeah, I mean, the upward revision number is 59,000 jobs from last month. That's a big number. So we have to remember that as well. But when you talk about construction workers, and I have a lot of friends in the industry, and they're having trouble finding workers. And so to see 19,000 jobs added, to me, is a big surprise.
Why are they having trouble finding workers in construction?
Because there's just not enough skilled workforce.
Okay.
People don't want to get the jobs.
I was wondering if it was a demand issue, but no.
And there's also
a hard job,
yes,
and it requires really terrific skills.
It does, and there's a backlog on the EB-5 program as well. So there's a lot of companies right now trying to go out and find workers to fill those jobs. It's an interesting time.
During the Great Recession, one of the things, these construction and some of these manufacturing jobs were always done in apprenticeship type thing. So the reason why we're going to be like 200,000 welders short, the older welders didn't have a job, so they couldn't train younger welders. Same thing in construction. And a lot of people, to Dagan's point, it's a tough gig, but this is a strong number. I think everyone hit on the good points here. The revision, 59,000, is positive. Manufacturing is really the story here. The U6, which is the real unemployment number, though, going down this much from 7.8 to 7.5, I think that's another major highlight there. So all in all, it's the kind of number I think Wall Street, before the session is over, I wouldn't be surprised if we rallied on this number, because it puts the Fed at bay. And a Fed that wants to be accommodating.
That's what I was trying to say earlier. It puts the Fed at bay. That's a good way to put it.